Right now, there's not much new, but we've seen new for the last few years. We've seen American money come in flows. We've seen the Asian capital, and they're all now present, integrated, have invested, and have, the chips are on the table. The runners and riders are identified in the market right now. We know who the major buyers are for shopping centres. I'd say that what we have seen, and the trend I've been talking about for many years now, is the marriage of equity and expertise. This is the trend that continues. It's continuing all the time. It's the people with huge amounts of equity wondering how they're going to deploy it, and they want to be in this sector. They don't quite know how to own or manage or to get the best out of their investments. So the partnership between liability and different investors, so pension funds and insurance funds and REITs and property managers and asset managers, is the trend that we're seeing right the way across Europe consistently, and we have seen for the last 5 or 6 years, and that's going to continue. So joint ventures, club deals, I think that's the major trend, and that'll be capturing different types of money, and some of that will be Asian money, some of that will be just traditional European insurance money. But the runners and riders are identified, and I'd say that we know a short list of pretty much all the investors for major shopping centres right now. There's going to be some new entrants, probably from the US, most likely. We're likely to see some M&A activity across our playing field, which is Europe. But Europe has shrunk over the last 5 or 6 years. And so very, very quickly, new names become very, very comfortable operating in the markets that have become increasingly transparent across the same period.
Especially when we compete for stop-shop locations or taking over of smaller stop-shop portfolios, we see a strong competition with South African, Israeli investors. Sometimes very hard to draw a line. How much do you invest? What do you pay for a plot? Again, then, important thing is to look at the time after you have bought, after you have invested. It needs to work out. It needs to work out when interest rates raise. So it's for us quite tough. I mean, we have different markets like Poland, for example, where generally it's hard to find good locations. And then we go to Serbia, where we have been very successful. We have now a pipeline of 4 new stop shops. But we feel that the plot prices are really, really on a completely different level than 2 years ago. And sometimes we just have to say no. This is a different strategy. We're not going to invest into that scheme or that plot because somebody from outside who has a different investment strategy wants to place the money for a yield that we would not accept.
Okay, and I'm guessing, we can come back on this, but I'm guessing that areas like Serbia, Montenegro are not currently within CBRE Global Investors and Multi's portfolio.
No, not really. We are focusing on across Europe, yes. Periphery, yes. Central and Eastern Europe, yes. But the main countries, right? So we are doing stuff in the Czech Republic, in Poland. We wouldn't do investments at this point in time further out. We do have investments there, but at the moment we're not actively searching investment possibilities further out than the Czech and Poland.
Yeah.
But I'd suggest that as the demand for real estate becomes more intense, buying the very best asset in Zagreb, which we've just seen the South Africans do, why wouldn't you buy the very best asset in a capital city in one of these peripheral countries rather than being only able to afford a third-tier asset in a more traditional market? It's absolutely the right decision. Buy quality, buy in the best location.
What we are now developing in Budapest is just the offices. So we are looking at retail, but as my colleagues mentioned, it's very difficult to compete in that market, especially when you have kind of aggressive investors, as you mentioned, from South Africa and others. And for us, we are looking at real opportunities, at development, but also at existing product, but we need to have to find opportunity. And while competing with some other investors like South Africans, it's really hard to find this kind of a product. But still, looking, as you mentioned, we need to buy really quality products, but also with a chance to have some opportunity there, either to increase the NOI over the roles of the lease agreements or extensions options, and hard to find, really.
I think if you look at the South Africans, it's their currency has probably declined. As an Englishman, I can say this, probably worse than even the pound. So our two currencies on a global scale have got some similarities. As you look at the markets they've invested in, and you look at the total returns they're generating from the assets they're invested in, you could take a strategy that brings them to other markets with a slightly more higher or cheaper leverage, and they could get exactly the same return. So we expect to see South Africans move to other markets. We're seeing them in other markets. Don't forget, Redefine has been in the UK for quite some time already. So they're there. I'm sure they've got an eye on it, but remember, they've also, in the last 24 months, just spent 3.4 billion in Central and Eastern Europe. I think by the end of the year, we're expecting it to be over 4 billion euros. That's quite an amount of money that's flown out of that economy.
Do you see them repeating that next year?
I think there's much more. I think there's more conduits. If you can see in the recent listings by Hammerson in South Africa, you've seen something from Schroders, who've got a listing down in South Africa. There's going to be lots more conduits for that money. There's only to date been 2 or 3 different conduits to the market. There'll be many more. And as we target that equity, I'm sure road shows from the opportunity funds that are raising right now didn't usually land in Johannesburg, but they really are landing in Johannesburg now. So if you're raising capital for any vehicle in Europe, you're now looking at South Africa. So the money's going to be tapped. So how it gets into the market might be a little bit more circuitous, but it definitely will keep coming, we believe.